So yeah, welcome to this analysis, and we'll be looking at the CENTCOM Iran FX impact analysis on these key currency pairs, USD GHS and USD NGN. So the objective of this analysis is to assess the CENTCOM announcement on the U.S. seizure of Iran vessel impact on the USD GHS and USD NGN by benchmarking it against the March 2026 Middle East hostilities. So the core purpose is to evaluate historical PIPs or PPS moves, DXY shift, and short time, which is between 48 to 98 hours forecast to inform trading or hedging choices on holding GHS or NGN amid geopolitical risk of flows. So yeah, there is news around the UX Spruance sees Iran-flagged MV Touska in Gulf of Oman after a 6-hour standoff, and that news also impacted on these currency pairs, these African currency currencies. So you can see on the current snapshot, which is today, USD GHS currently trading 11.0869. Also, it has a depreciation of 24%, which is against its previous close, which is around 11.06. So we have the USD NGN 1346.98 and also having a depreciation of 0.39% against its previous close of 1341.79. So the current DXY, the strength of the dollar at the moment is 98.31%. It also has depreciated to 21% as of today. So the XY at February 28th, which was when the Operation Epic Fury kickoff, was 101.3. So looking at the DXY timeline from hostility to now, we can see the various USD dollar index key levels. January 27 floor 95.55, which is a cycle low. February 28th, the war start it got started on this date. Was around 101.27, a pure safe haven surge. On March 31st, which was a peak, 100.64, cycle top, and then 50-day MA 98.69, which was now broken. Sorry, broken and now resistance. Then same thing with the 200-day MA, the level 98.51, broken now resistance. DXY now April 20th 98.31, below both the moving averages. Key support zone 97.50 to 98.10, which is the next downside target. So the XY has shielded 290 BPs basic point from its March 31st war peak to current levels, now trading below key moving average in a confirmed bearish structure. So the Iran versus Seizure brought a mind plus 21 basic point bounce today, not enough to break structure. So yeah. So looking at the currency pairs of focus, which is the USD GHS, the CD, we can see a moderately exposed. So what does that mean? So looking at the March hostility timeline, which is more like the focus from February 28th, that was when the war began. Safe haven dollar demand spikes, and it was as if the city was under immediate pressure. City started trading from 10.80 to 10.95. So between March 1st to March 15th, that was the escalation phase. The Strait of Hormuz blocked oil surge, dollar demand for imports, dollar demand for oil imports, and city slides. So the city also traded between 10.95 to 11.15. On April 13th, so that was a naval blockade. The U.S. blockade formalized. City stabilized but remains elevated as against USD. So after that period, city traded 10.89 to 11.05. So today, which is April 20th, the Touska seizure added fresh risk premium, and city edges weaker, trading at the moment 10.0869. So yeah, this is the peak movement since the war began on the CD. So far from February 28th to March 31st, that's a peak. The peak point has on this peak duration, this time period has been up to plus 2,000 pips. So between March 31st to April 13, more like a relief, 700 pips. Between April 13 to now, at the moment, which is more like a repeat, we have 350 pips. So today's CENTCOM move is about 269 pips, which is more like a plus, which is a depreciation of 24%. So yeah, so looking at the 48 to 96 hour outlook for the GHS on the base case, which is more like a no escalation. So if we're expecting no escalation, it means that we can see plus 100 to 250 pips on the city. So around the risk case scenario, which is when if Iran retaliates, we can see city moving between 350 to 700 pips. Then the bull case, which is the ceasefire hold, we're also going to see an appreciation of 100 to 100 to 200 pips. So the target range is between 11.09 to 11.20. So the challenge is the fact that Ghana has no oil export buffer, and any USD demand spike hit the city harder, and the BOG reserve under pressure from the import heavy energy balance. So that's a bit on the GHS around the March hostility timeline, the peak movement since war began, and for the 8 to 96 hour outlook for the GHS. So looking at the if the fact verdict around holding the city, or sorry, holding the city, we can see that holding the city on the naira. So the focus here is on the city. So we can see the Ghanaian city, the DHS, has no significant oil production buffer to benefit from the hormones-driven energy shock, and the city's stability demands depends on remittance flows, cocoa/gold receipt, and the BOG intervention, all of which weaken in a sustained escalation. So the city has already slipped up to 1.28% in a month, with Iran threatening retaliation and no more peace talk before the April 22nd ceasefire expiry. Further upward pressure on the US GHS is the base case. So the verdict holding GHS in the next 48 to 96 hours carries meaningful depreciation risks and reduce GHS exposure or hedge if possible. So at the moment, I'm actually going to move to the NGN. So looking at the USD NGN, which is the Naira, we can say that it's relatively insulated. On the March hostility timeline, February 28th, March, that was the time the war began. The initial NGN pressure from risk off, but oil price surges, which is more like a net positive for Nigeria, and the USD NGN was trading between 1,340 to 1,360. So from April 1st to from March 1st to April 10th, that's the volatile phase. The CBN defended the Naira, and the Dangote refinery absorbed local fuel demand, and the EM risk off drove the NGN to 90-day high of 1,480. So yeah, so this period we had the USD NGN trading between 1,380 to 1,480. So from April 10th to April 17th, the CBN recovery, the CBN sold reserves, and the inflation fell to 15%. Naira recovered sharply to 1,358. So between this period, we've seen the US NGN trading between 1,340 to 1,370. So as of today, which is April 20th, the Touska seizure added the tension. Naira drift back up from previous lows, which is around 1,346.98. So the peak movement since the war began from February 28th to 90-day high, we have like 14,000 pips. High to current recovery, 13,000 to 300 pips, massive. Today's CENTCOM move, we had a plus 519 pips. So for so the 48 tonight is our outlook on the NGN. So the base case here, which is if there's no escalation, we're expecting a 500 to 1,500 pips move. The risk case, if we run with retaliate, also going to see like minus 500 to plus 2,000 pips. So the bull case, which is ceasefire holds, they're also going to see, we're also going to see on the positive side, the 1,000 to minus 2,500 pips. So yeah, so the where we see the red pips is more like on the negative side. The other color, more like a blue color, is more like a neutral. Then the green is a positive move, more like an appreciation. So the target range here, 1,340 to 1,380. So Iran retaliation paradoxically benefit Nigerian via oil price spike, and the CBN has up to $48.94 billion reserves. So, and also the Dangote refinery reduced import exposure, and Naira has structural support. So, for the Naira, currently relatively safe. The fact that if it's safe to hold the Naira between 48 to 98 hours. Looking at what is reached the verdict here, Naira is uniquely positioned in this conflict. It is an oil exporter whose Dangote refinery now supplies African markets, left exposed by the Hormuz shutdown. So higher oil prices directly expose FX reserves. The CBN have shown willingness to deploy reserve now at $48.94 billion to defend the Naira. So with inflation falling and the GDP expanding, fundamental support the currency better than the most African peers. So an Iran retaliation-driven oil spike could paradoxically strengthen the Naira. So the verdict here is the NGN is more defensive African FX position in this environment. Hold with caution, but not recklessly. So yeah, looking at the scenario matrix in the next 48 to 96 hours. So scenario, we have the fact that Iran retaliate military. We can see the DXY also move up between 95.5 to 101, and on the USD GHS, we can also see a depreciation between 11.18 to 11.35. So for the USD NGN, we can also see an appreciation between 1,330 to 1,350. That is NGN gains. And if the oil spike up to $100 plus. So if stocks resume and tension ease, we can also see the DXY come down up to 97.5 to 98.1. Then on the USD GHS, we can also see an appreciation 10.97 to 11.05. So for the USD NGN, you can also see 1,355 to 1,390 oil premium loss, and that if oil drop it from $80 to $88. So the status quo hold, which is the base, we can see the XY around 98.1, 98.7, and USD GHS also moved from between this range 11.09 to 11.18. For the USD NGN, we can also see it's trading between 1,350 to 1,370, and oil also moving between $88 and $96. So the key watch for the next 96 hours, April 22nd, ceasefire expiring date, if not renew. Markets reprice conflict premium immediately. Iran IGC statement to watch for any severe response activation against naval assets. So also on the Brent crude, currently it has broken from it has broken above $90, which also can also translate to Naira gains and CD loss. So the XY 98.1% support, 98.1 support. The moment if the XY 98.1% support holds, it means GHS will be under pressure, and if it's break lower, we can also see the see the relief. So for the CBN intervention, we can also monitor the FX reserve beta, which from $48 billion, and which if there is a drop within this range, it can also be, you can also see the NGN, going down, weakening. So yeah, the Islamabad talks, if it holds, which we have the VP Vance and the blocks week off in Pakistan in April 12th. If a drill framework was able to, happen in this, if the fixed stock holds, means also there will be a sharp GHS or NGN stabilization. So yeah, that's it from this analysis. Thank you so much. More and more analysis will be coming up. So yeah,